Markets now, and fresh records for US stocks. Solid gains on the Dow, the Nasdaq and the S&P. Some of the stocks that have been hit hardest by coronavirus outbreak are making really substantial comebacks. Look at Wind. It was up 3% yesterday. It's up another 3% today. It's almost regained all its losses, as one might have expected. Anyway, the analysts are pointing to figures from the last few days appearing to show the number of new cases levelling off. The World Health Organization says it's too early to predict if it will get better or worse. Joining me, Ethan Harris, Head of Global Economics at Bank of America. Good to see you.
Good to see you.
What do you make of it? What do you think? What's your understanding of what's likely to happen economically with coronavirus?
Well, first of all, I think that it's too, as you said with your report, it's too early to know where the virus is going. I mean, right now in China, there's a big re-engagement in the economy where people are coming back to their home city from vacation. They're starting to commute to work. They're starting to go shopping. And so we're going to find out a lot about the depth of the disease and the transmittability of the disease in the next few weeks. And I think that's why the experts are reluctant to make any call at all in this. At minimum, this means a bad first quarter for China and some small spillover into the rest of the world. But if the virus really goes outside the Hubei province and affects more of China, and this opening up of the economy they're trying to do right now is reversed, then it's going to be a problem.
Jay Powell said yesterday the US economy is in very good shape. The numbers are all looking really very, very good. I mean, the unemployment way down, even the employment rate ticked up, but that was a good enough. That was for an advantageous reason as well. Interest rates remain low and inflation remains. Does this mean that this rally, this bull market at the moment that's in full flood, is justified?
Well, I think it's justified if you take the risks off the table, and one of them is staring us right in the face here with the coronavirus. And again, I mean, right now the market is looking at this drop in the number of cases per day, and that looks pretty good, but that's before we find out how the virus proceeds with a fully employed economy.
So let's just put coronavirus off to one side. And I know that's a big if and a big but Ethan, the trade spat, the tariffs are still there, but the spat at least seems to have abated.
Yeah.
It seems that one by one, risks have been removed, except exogenous events, have been removed from the table just in time for an election.
Yeah, and I think that's right. I mean, the election clearly motivated the trade deal, and so that raises the question, what happens after the election? But for now, we're in a very healthy economy that really does well absent a shock. The stock market rally is justified on the grounds that, A, we're in a very low interest rate world, so the valuations of stocks should be high. I mean, people don't really want to hold bonds, they want to hold stocks. And you've got a healthy growing economy, and then you have the Fed. Look at how friendly the Fed is these days. The Fed is trying to encourage inflation rather than fight inflation. That you can't get a more dovish Fed than that. So the market's got some tailwinds behind it here.
I know it's always a case of, gosh, it's barely got going, and I'm already asking when it's over. But there is a case for saying, you know, we saw the temper tantrum the markets through when interest rates rose, admittedly the last one. But at some point, again, is your best guess a hike or a cut as the next move?
Well, I think that in the next year, a cut's much more likely than a hike.
Really?
Yeah, because I think that, remember, the Fed is looking at the economy and they're saying we've not really succeeded in bringing inflation, wage growth, income growth back to normal. We got to make sure that happens before the next recession hits. That's why they're being so dovish. So the Fed is providing a floor under the markets. Now, you're right. At some point, we're going to reach a hurdle that the markets can't get over, like inflation picking up or the virus.
But it didn't pick up last time. Didn't pick up, did it?
No, inflation hasn't really picked up.
So So are we in a sort of Japanification environment? Except there is growth here. There is growth here. But it seems that no matter what happens to monetary policy and stimulus, even with the additional stimulus of tax cuts, we should have been seeing inflation up towards 2%.
Yeah, and I think that it's a massive challenge. But at least we have this. We have a central bank that, unlike the BOJ back in the days when they allowed deflation, that's really trying extremely hard and still has ammunition to try and create that inflation. So I think it's too early to declare us being Japanified here.
Thank you, sir. Always good to have you with us. Thank you.
Pleasure.
I really